Okay, so we're going to just review the morning on NQ. And I'm just going to go back a bit. So at the start of the day, we knew there's news at 10 a.m. There's a red folder. Red folder not much having much impact these days, it seems. And what that means is like I'm literally looking for liquidity to be swept. You know what I'm going to do is I'm going to actually use MNQ just to keep the NQ chart clean. I don't want to disrupt my alerts, so I'm just going to use this. So bear with me. So when I show up in the morning, essentially I'm just looking at where all the liquidity is, right? So we got tons of LR here. I'm marking levels like H1 or H4 like usual. And here's H1. Actually, I probably marked that as H4. Let me go back. Oops. H4. Then we have the sell side. H1. And then I usually go to the 15 after that. And this is where, like I said, on Friday, this is where I'll like fine tune what I'm doing. Now, when the morning started, this is what it looked like. Okay. So we're about 9:30 on this candlestick. So literally waiting for, you know, pretty key levels to get swept that seem pretty clear to me. H1 sell side liquidity. Now I think with NQ it didn't sweep that low, if I'm not mistaken. Yeah. So here's the other thing too. Like, look at the discrepancy. So NQ just misses sweeping. Excuse me. NQ just misses sweeping 291. But if we go to MNQ, I think MNQ might have tagged it. Low 291. Okay, so it actually tags it but doesn't sweep it. I always do my analysis on NQ. So even though you see me doing it on MNQ, it's just because I don't want to disrupt my levels once again. So this is not a sweep. And we're at open. And I'm literally waiting for this to get swept. So if we go to the 1 minute, this is what it looked like. So we have this H1 level that gets swept. And I'm going to just keep hitting next. Because I personally I didn't see anything here that made sense to me. If I go to the 2 minute, like I can see that there's FVGs here. And if we look at the size, it is in that range that I like. So it's 7 points. But my problem was that I was just waiting for this level to get swept. And I didn't want to like risk taking it. The other thing was that the setup happens right at open. Okay. So this is another flag. Even though that setup looks valid. Now, if we go to the 3 minute, the 3 minute had a better setup located a little lower. In these types of situations, I would typically wait for that 2 minute to just confirm because it's located a little bit higher. But nonetheless, it does end up confirming and it does take liquidity. So there's just a lot of flags for me on this setup, okay? Even though it did work and it did go to TP, okay? It like, to me, there was just flags, okay? So flag number 1, we're at market open 9:30. I usually like to let the market breathe, right? You want to let it breathe for like 5-10 minutes or so. You don't want to be entering right at 9:30 because usually that's when all the chaos happens. And we want to wait to see what price is actually doing. And like I said, with these levels all down here, I just thought there's no need to rush into a position. And I have the daily EQ here. So even though this might work out, that's fine. There's the potential for the daily EQ, okay? So that was the first play. Let's get rid of this line. We'll keep that line down there. And the second part now is price starts tagging the daily EQ. So I had obviously set alerts, said, hey guys, DEQ is getting hit. But when I looked at the chart, there's no valid setup here. I went to the 2 minute. There's a little small guy here, nothing here. If I go to the 3 minute, I mean, there's a really super small FEG here, but this one's way too low, right? We don't want to be entering a short position way down here. We want to be entering it as close as possible with a nice clean reaction. So for me, I was just waiting to see how the 1 minute would perform. Now, in some situations where we get like a little bit of consolidation, I'm okay with that. But when we start getting lots of consolidation, and this is very subjective because to me, I could say, hey, this is a lot of consolidation. But to you, you might say, that's not that much consolidation at all. It looks pretty good to me. And we're talking about this right here. So we end up getting a sweep here. Okay. Oops. You get a sweep. And then what you'll notice, if I just hit the replay button back just a little bit, I want you to just see the indicator showing you that there is an FEG there, right? So there is an FEG right here. If I go to the size, we're at about 9.25, so it's a good size. It's right where we want it to be. It just didn't happen here. It happened here. If I turn on the SMT indicator, it should show SMT, I believe. Will it show it? There it is. Okay, so you have SMT, and then if I show you the setup, what's up, Zanu? This is the setup right here. So I, once again, decided to pass. I just didn't like the chop. And I decided to pass on this. I will also share that it was inside of a 15-minute bearish FEG. Okay, you can see that right there. It's also a 5-minute FEG. So in hindsight, you know, maybe I missed out on this one. But the problem isn't that I missed a trade per se. The problem is, like, if I start breaking rules and doing things I shouldn't be doing, right? So to me, I did feel this was, like I said, too choppy. I didn't want to risk it. So I passed. And price ends up doing one of these. And we go right down to the hourly low, right? Huge move, right? And the thing with missing this setup is that as a trader, and I had mentioned this also as well in my chat, like, you got to be okay that you're going to miss trades. You got to be okay with the idea that you're not going to be in every single trade, right? And to me, the DEQ setups are the most subjective ones to trade. And I just want to show you, let me see if I can show it to you. Give me one sec. Let me see if I can find the difference between what we see here and something else that is significantly cleaner. Just give me one sec. I just got to try to find it again. Thought I had it, but I guess I don't. Ah, here we go. Okay, so I just want to show you this. So here's an example from May 13th. This is a trade I took. But I just want to show you the difference, okay? So even though price went lower, went back into the DEQ, went lower, and then spiked back in, you notice how this is not choppy? This is very clean price action. Even the response, like the reaction, is very, very clean and clear. This is what I wanted to see. And this is the difference between choppy and a little bit of, giving the setup a little bit of wiggle room, right? But if I go back to what it actually looked like, this is what it looked like. So you can see my reservations on why I decided to not take this trade, because once again, this is clean, nice, smooth, clean reaction, V-shaped. This is not anything like that. So even though we have it inside of a higher time frame IRL, even though there is SMT with ES, the way the formation of the structure in terms of that fractal threw me off completely, okay? So skipping this trade is perfect because I stick to my rules. I showed you the difference between a clear one and a choppy one, right? Now, once again, I said this at the top, it's a subjective thing. Like, to you, this might be valid, right? To me, it's not. So that was the second setup. Now, I just want to also share one other thing, which I thought was super, super interesting, is that does anyone see another type of setup here? An entry trigger? Does anyone see another entry trigger here of a different type of setup? Bingo, unicorn. So if I flip on the unicorn model indicator, you'll notice there's a nice clean unicorn that actually formed off the daily EQ. Now I'm not sure how many people maybe took that trade, but this was a valid trade, you know, runs 1R and then some. Beautiful setup. The only issue I would have with this unicorn is, so you can see I have it set where it's catching 5-minute swings. The only reason I have that set is because sometimes the indicator will not validate. Like if I had this set as a 15-minute, here, let me show you what I mean. So like, let's say if I just had it set to 15-minute, it'll disappear, right? The reason I have it set to 5 minutes is because I still want to make sure I do my due diligence. If I ever look at for unicorns, that I want to have H4 15-minute alignment to catch that 1 minute entry. But sometimes I'll have that alignment, but then the unicorn model indicator won't show the setup. So I just keep the 5 minute on, but the major levels of interest are obviously 15-minute and 1 hour. And then of course you're looking at FEGs as well, right? So you have this setup here. If I go to the 15-minute though, and this is kind of what I was trying to say, is you have price inside of a 15-minute bearish FEG. Okay, so if your bias was bearish today, so let's go to the 4 hour. Okay, let's say you had a bearish bias today. Why would you have a bearish bias? I'm just curious. Did anyone have a bearish bias today? Or was everyone bullish? So this is the 6 to 10 candle, right? What time does that setup actually happen at? You were bullish, Bobby? Okay. So remember, that H4 candle closes at 10. That's right here. Okay? So there's no knowing how that candle is going to close. Xander says, I was bullish on London, lost, and got to work. Mika says, bullish because of the lows that were swept on ES. Tons of 50-minute failure swings leading up to the 50-minute unfilled FEG. So what I really love is that you guys are obviously looking at that higher time frame and trying to understand the perspective of it. I think that's really good. For me, when I looked at this, it's a little tricky. Let me go back to my HTF bias thread. Let's see what I wrote. I can't remember what I put. So I was also bullish. IRL to ERL. My assumption was that this volume imbalance at worst case scenario would be respected and then we would see a move higher, right? But if we go back here, what we can see is that this volume imbalance actually doesn't get respected, but that happens at 10. By like at 10 o'clock, it closes below. So even though you have the sweep, what else did I write here? Asia expansion, London consolidation, New York continuation. So this is kind of what it looked like at 839. Price actually does end up sweeping London low here. So this kind of distorts any sort of projection I had in terms of the daily narrative. But this is tricky. This is tricky. If like you're trying to figure out how to read the bias on the H4, I feel like you kind of have to wait for that H4 candle to close and then make your bias. The problem is at 10 o'clock, the candle closes here, invalidating this bullish POI. So you'd probably say, hey, I'm going to stay bearish, but the problem is the setup already happened. Do you see what I mean? So, and then if we look above, we know that we have this bullish FEG sitting right here. So it's hard to be bearish, in my opinion, on this. If we're trying to figure out what is the higher time frame bias using the H4. Because if we go to the 50-minute, we don't have any problems. So let's just say that your H4 was neutral, okay? Which is fair. You can say your H4 is neutral because it's not as simple as saying, oh, there's a clear sweep, we're moving from external to internal, right? There's a lot of weird things going on there, right? And a lot of subjectivity in the sense of, does price close, does it not close? I don't know. So given that there's that vulnerability there of the unknown, you could then start to say, hey, well, I'll just use the 50-minute as my higher time frame context. And I've watched Matt do this before, and I'm sure many of you also do this. I've also done this in the past. But in that case, then you would just say, well, here's the 50-minute bearish FVG, and when you go to the 1 minute, this setup then is 100% valid based off that parameter. And once again, you have that SMT, which I know with a lot of people who are trading unicorns, that's a mandatory component to the setup, right? Is having the SMT. So I think personally, if I was trading a unicorn model, I think this is a much cleaner setup in terms of an entry trigger versus what I would have done for the IFVG. So good example of the unicorn versus the IFVG in this scenario. I always tell you guys, I've been saying this for a very long time, but usually when we get to these key higher time frame levels, you're going to typically see one or two of the three types of reactions or entry triggers. One of them is a V shape. One of them is like the unicorn, like a 2022 mentorship model style. Even if it's not a unicorn, it'd just be a CISD entry, but still a breaker block. And then the third one is a swing failure pattern, right? And in that swing failure pattern, you might still see the IFVG. So I hope that makes some sense. If anyone has any questions, drop it in the chat. It's funny, I think I did end up going to NQ there for a sec. Take a quick look at what's happening with the current market. As we can see, the daily EQ on ES is right here. Price is kind of bouncing off of it, but look at the discrepancy between the two. NQ is way up here. Big distance away from the daily EQ. Ideally, we want to see the two correlated, right? Sanders says, yeah, I definitely need to wait for those higher time frame levels because being inside of an FVG is not enough. And I think it just depends on the way you're aligning that setup. And, kind of like what I was just saying, right? If you are using H4, 15-minute, and 1 minute as your time frame alignments, if the H4 is neutral because you don't have clarity on it, you can still use that 15-minute to gauge the direction of your setup. But then you definitely want to have other things aligned, right? Like you'd want SMT in there. You'd want to see how the price is actually moving. And I'm talking about those candlesticks, right? Like what do the candlesticks look like at that level? So at this level here, like if we go to a 5-minute, or actually let's just stick to the 15-minute for a sec. So this would be your 15-minute FVG. But if we look at the candlesticks, are you seeing respect in terms of the bearish FVG, right? And I would say you are. And then if you throw the daily EQ into the mix, there's another level of confluence to say, hey, you are trading at a key level, right? So from a unicorn perspective, I think it was a much cleaner trade once again versus the IFVG, and I showed you why with the IFVG, because in terms of the IFVG, this is too choppy, right? This is what I want to see. I want to see clean bounces, okay? Okay, let's exit this. So we did that. I talked about the... Okay, let's talk about my loss now. Let's talk about my loss. I'm not happy about this, to be honest with you guys, but it is what it is. We have to learn from our mistakes, right? We all make mistakes. So I watched this setup obviously work out, right? So then price starts to move back into the daily EQ towards the end of that New York session. Now, the thing with the New York session is I do have a little bit of grace on myself in the sense of the time. So, like, I will extend my trading till like 11:15, 11:30, only because I want to see if a key level gets tagged outside of that 9:30 to 11 window. So it could be a New York high of day or low of day. It could be the daily EQ. It could even be overnight session high or low, right? I'm just getting pinged here that London is being tagged. We'll go to that in a sec. But as I'm watching this, I was looking at this and I'm thinking, this is exactly what happened here, and it worked out here. What if it works again? Bobby says, I was so focused on price not sweeping those sell-side liquidity that I never even saw the short setup. Maybe I'm not flexible enough with my bias. Well, how do you determine your bias? See how it's chopping? And then it starts to close above slightly. Now, the reason I said I broke a rule here is because, once again, here's your FEG, or the IFEG, I should say. Now I'm stacking the two. What's up, Vidal? Hourly FEGs and swings for Bobby. Yeah, I mean, there was nothing hourly here, right? In my opinion, this was only 15-minute setup. So if you're looking for something hourly on the top side here to go short, I don't think there was any alignment for that. Maybe I'm wrong, but yeah, like I didn't see anything aligning here for 1 hour, right? Like there's no swing, there's no like buy side liquidity levels, there's no hourly SIBIs, right? But on the 15-minute, we do have that. Let's go back to the 1 minute. So in this setup, what I did was I told myself, if the SMT is there, I'm going to take this trade. I said, I'll take the chance of this trade. If the SMT is not there, I'm not going to do it. But this is very similar to this. Alice, what's up? Now, one of the more questionable things is the size of this, right? Now, I've stacked these two smaller FVGs right here, right? There's one small one here, and then there's another small one here. So I ended up just stacking them because it looked good enough to me. And we got the close here. And if I was to... My entry was a little bit lower. I did have my stop loss set at the swing point. And I thought... I mean, to me, I thought this was... We probably could get a sweep. Look at all the LR here, right? I thought maybe we could get the sweep. Let's see where 1R is. 1R is about here if it's a perfect entry. And then we get one of those. Now, I will tell you another thing in terms of trade management. So, what I told myself when I was in this trade was, if this level right here gets tagged, I'm immediately moving my stop loss to break even, no matter what. But it front-runned it. And then it went all the way through, and then we get a closure back on the other side of the IFEG, and then the rest is history. The trade's cooked. Now, the reason I broke a rule here, the reason why I said I broke a rule here is because it's not that I traded outside of 11 a.m. I already have a rule for myself to give myself a little bit of grace on that. So that's not the problem here. It's not like I traded in lunchtime, right, with the funded account. That's not what I did. The problem for me was that I took a trade off the daily EQ and it wasn't clean. I wasn't following my rules. My rules dictate that there has to be a strong reaction, instant reaction off that level, okay? And there's some grace to that, of course, right? You got to use some subjectivity, but it should happen relatively quick, right? It should look like this. And it didn't look like this. It looked like this. A complete disaster. So I took that loss. It's fine. Like, losses happen. But there's a lesson here to learn, right? That just because it's words I gotta read to myself because I don't need to be in every single trade, right? Now I took a calculated risk here. I didn't take a full size position. I should also say, just because given the context. So if I was risking, I'm just gonna throw an example. Like if I was risking 500 on a typical full size position, I'd want to risk less than that, right? But it is what it is. Imran says displacement, all we need after confluence. Allah said, ES just did me good. Something with news, I bet. All right, perfect. Let's go to the chart. Let's see what's going on, because I did say we were going to talk about it. So, looks like that previous daily high level, which has already been mitigated, but it's still right there. Let's see, what other level is in play on? Okay, so we got an hourly FEG here. Got like a 15-minute order block here. Doesn't look like there's any SMT or anything. Now, if we're looking at we got a massive sweep here, but this is, once again, you have previous all-time highs right here. Shorting at previous all-time highs is not advisable. From a technical perspective, it is, but you have to gauge what's actually happening in the market, right? Is there bullish news? Is there bearish news? Right? Let's go to the news. What's happening? Why is price shooting up higher? So Trump's being very active right now. So looks like he's talking to Hezbollah, and he's trying to basically stop all the violence that's happening there, because that is what disrupted the ceasefire for Iran, right? Iran said that because of that, the ceasefire was like a rule was broken there, right? So lots of stuff happening here, news-wise. He's on CNBC. And whenever Trump's speaking, you got to be careful, right? Like, you don't want to be stuck in trades when he's talking. So even though we can see a setup, we got to still be mindful that he's a red folder flag in and of itself, or folder as in and of itself, right? But if we're just tape reading, it's a completely different story, right? Now, if we look at this size of this FEG, this is like a huge flag to me, right? It could be potentially a huge flag. If this is like 40 to 50 points, then it's a problem. This looked pretty big, but it's actually only 30 points. So to me, it's not too bad. If price were to go lower, but your stop loss is going to be pretty big. And then once again, you have the news. But we can watch this. Look at the 3-minute on ES. Let's do it. 3-minute on ES. Daily EQ. I know it's not singular, but it was obvious. NQ going for Asia high. Yeah, so you played like a draw on liquidity idea for NQ. And this is the setup you took, I'm assuming, right here. That's awesome. Luke Trades in the house. What's up, brother? Good to see you, man. Cool pick. Cool pick. Is there SMT there? Doesn't look like there was SMT there. Not there either. And in terms of the idea of singular versus non-singular, I would throw this back to you all. What made you feel like this was non-singular? Is it that? This Sibi right here? Yeah. So, I mean, did you front run the entry? Or did you wait? You waited for the close? Yeah, it's risky, man. But you're right, you know, you have NQ on the left here. It didn't sweep those highs or lows, or sorry, the highs yet. So, you know, it's a risk you got to take, right? But at least you know where your invalidation is, right? Because if price starts to close back inside of the IFEG below the, you know, bullish FEG right here, you know where your invalidation is, right? And you always go up BE on those situations. Yeah, and I mean, truth be told, like, did this actually hit? It didn't look like it hit, but it did feel supported here. So, and then of course, yeah, you got the news to help you out, and that's good, man. Sometimes you're gonna get news to help you out, and this is a great example of the subjectivity idea, because it, you know, well, number one, I'm not trading ES, I'm trading NQ. Okay, so that's number one. Number two, though, is like for me, this would have been a non-singular setup. So I would have passed on a setup like this. But this is a good example of independent thinking, the definition of risk management, right? And how it looks for one trader to the next. It's not always going to be the same. But I think it's good to understand concepts and then apply them in a way that makes sense to you, right? So, for example, in this situation with ES, all this is saying, when price gets into that situation where it runs into trouble, like a SIBI or a busy, he'll move his stop loss to break even, right? And that's a risk management strategy. So you have to be very, very mindful of the things that are happening with the setup and how you want to play it and how you want to manage it. Because for someone like me, once again, I wouldn't have taken it. But for someone else, they would have taken it, and they would have had to manage that trade a little more aggressively. And there's no knowing what the trade's going to do, right? Like I showed you that DEQ trade I took, which was a short. There's tons of LRLR there. It's singular, and it never went anywhere. It went like to 0.7 R, and then it reversed. And it didn't even take out the liquidity, right? The nearest liquidity. So price will do whatever it wants. But we have to stick to our rules and how we define our risk management, how we define our trading management. You have to know what those parameters look like even before you hit execute on a trade, because you can't start relying on emotions and like without some logic behind it already predetermined. And we always say plan the trade and then trade the plan, right? Exactly, brother. Oh, so you said it perfect, man. You got to trade and journal and stick to a model to get that edge. Yeah. That's all you're doing. So, you know, I went back into my journal to see for the month of May how many DEQ setups I took. And this is even if I made a mistake or not. It didn't matter. I just calculated all of them. And it looks like I took about 9 trades that were DEQ related. 6 of them were winners. 3 of them were losers. So that's 9 trades total. The crazy... Oh, wow. We're getting a massive move here. What is going on? Result of a drone attack. Okay. Wow, this price action is crazy. Absolutely crazy. Are you still in the trade, man? I hope you are. I wish. Yeah, that's how it goes. What a pump. Yeah, new all-time highs. Crazy. Is Bitcoin moving? I've been watching Bitcoin a lot lately. I have a very different trading model with Bitcoin. I don't trade ICT with Bitcoin and crypto anymore. I've gone back to the basics. Support and resistance, supply and demand. And EMAs and things like that, or MAs and EMAs. Yeah, exactly, man. Trading this PM is like a minefield. You never know when you're gonna, step on something and it explodes on you. Exactly. Let's go back to. Okay, let's clear this off. And this brings me to a quote from Tom Hugard, where he says, "A trading life is not defined by what we do every now and then, by what we do over and over." This is from Best Loser Wins. But I saw this quote in I think Take Profit Trader had a marketing email, and they had posted this for some reason. And I thought, oh, that's a pretty cool quote nonetheless. And I love Best Loser Wins. It's like my trading Bible. I have a couple other ones too, but that one is just fantastic. But yeah, a trading life is not defined by what we do every now and then, but by what we do over and over. So it's a repeatable process that we got to instill into our trading routine, right? 100%, Mika, 100%. Yeah, I personally like it better than trading in the zone. I think it speaks more to our generation than trading in the zone. And it's not to say trading in the zone doesn't have value. Of course it has value. It's just the relatability. I think Best Loser Wins kind of just hits me differently. And of course it's a newer book too, right? So that would make a whole lot of sense. But, there's lessons to be learned in both books. So yeah, as we're watching this play out, first off, you should definitely not be trying to catch a reversal here, in my opinion. I think it's too risky. Yeah, just long, yeah. Market long. Market long. Let's take a look at the stat map. Where's the stat map in all this? Because if we're getting to those levels where it's a price discovery, I love using the stat map to gauge those levels. So here we go. Here's the stat map, and price is now starting to accept over there. So we got 13 minutes. I talked about this last time, but one of the ways I like to trade continuation IFEGs, and I'll just kind of go over this again, is I like to trade them in relationship with the stat map. I use the stat map as like my compass. And what I ideally want is for hourly candles to kind of close in the middle of the range, up here or like here, for example, right? And then what that allows me to do is take that trade from here to the top, or from here to the bottom. And that's all I want. It's just to catch that little piece. Now the way I do that is, first off, you got to wait for that hourly candle to close somewhere in the middle of the range. Then I'll drop to a 15-minute time frame and start looking for retracements into a 50-minute FEG. And once the price moves into a 50-minute FEG, then I can move into the 1-minute time frame and start to put together SMT, look for the IFEG, and then take the trade. And that's what I have done in the past. I've been sharing it a lot. It's worked quite a bit. Is it something I would take on funded? No, but it's definitely something I'd take on eval, for sure. If I felt like it. So, but we can also watch that close too. So we got 13 minutes for that close, and this just like ripped through the hourly FEG. Also, did everybody manage to go through their journals for the month of May? Like, did you review? I really hope you did. Did you take some time to figure out things? What you did right, what you did wrong, what you could have done better? Month end is a perfect time to review, while we kind of wait for the price to do what it's going to do. If you go to Trading IQ in my section there, if you go all the way up, I'm trying not to overload with too much information in this, otherwise things are just going to get lost. But But if you go to, where is it? Trading Journal. Right here. Oh, wait, no, right here. Okay, so if you go back to February 21st, 2026, posted this monthly performance review document. It's free for you to use, copy, duplicate, whatever, but I highly recommend to go through this. Now, you don't have to answer every single question, right? But, I mean, try to go through it, right? There's tons of stuff here, but try to go through this honestly and answer these questions and see how your month went and then note it. So I put this here for everyone to kind of use. It's a starting point, you know what I mean? It's a starting point. You can adjust this. You can do whatever you want with it, but it's a starting point. But it's there for you. It's free. Just click this link and make a copy. Highly recommend you do this, though. Something like this every month at the end of the month. So I did my own review, and like I said, I started identifying the daily EQ as being an area where most of my losses actually come from, and most of my mistakes come from, oddly enough. And then today, of course, I made the same mistake, right? Off the daily EQ once again. My best setups actually come off of higher time frame levels. Hourly H4 liquidity levels, BSL, SSL, and Asia high, Asia low, London high, London low, previous daily high, previous daily low. But previous daily high, previous daily low don't always come into play as much as, say, the overnight session highs and lows, because this is like textbook. Like, if I ever see an overnight session high or low get tagged with an IFEG, and then you start throwing SMT into the mix, or maybe it's inside of a hard time frame imbalance, like, that is A plus. That is not even A plus. That is S tier, in my opinion. But more often than not, I find we do see more of the H4, H1 levels that are not those overnight session highs and lows get tagged, and then we can kind of catch that reversal off of it. But those trades have been amazing. The problem with those setups, though, is the amount of patience required to sit through the price action and wait for it to hit that level, right? You'll often see in my thread I post what I'm looking for, right? And I have no idea. Like right here, for example, at 9:54 in the morning, I was saying, hey, this is what I'm looking for, right? I want a long from down here. I want a short from here. The daily EQ at this point was irrelevant, right? It hadn't come back into play yet. But those are the extremes of the range, right? And that's at 9:54. And only now are we getting price taking out one of those levels. And even then, it's outside of the kill zone. It's outside of any window I'm willing to take a trade on. But it just goes to show, once again, the example of how much patience you got to have. And that, you know what? Like today, I technically shouldn't have been in any trade today. I shouldn't have even, like I said, I shouldn't have been in that trade. I should have just watched it. And I should have just waited for these lows to get taken out, because that would have been a much cleaner plan. But, you take risks in this game. You calculate those risks. It's not like I went full position size. I knew what I was doing. I knew the risk that was there. I knew I was trading after 11, which is obviously always going to be riskier to take. And you then live and die by the sword. Like, it is what it is. We move on to the next one. You note it. I've now got it in my head that, like, I have to be extra cautious with DEQ setups in terms of exactly what I want to see. Because if I don't see exactly what I want to see, which is this, nice and clean reaction, beautiful setup, nice momentum. If I don't see something like that, I have to be extra cautious or just not take the trade. Okay, so we got less than 6 minutes to go here before this candle closes. Bobby says, I did. Conclusion is that I struggle with FOMO. We're talking about monthly review here. The correction is to only take an IFEG and IBs. Nothing else for the month of June. And I would say, I would ask this of you if you want to share, but like, what do you find triggers the FOMO? Because it doesn't just come out of nowhere, right? So for me, once again, that example where I took the trade today off the daily EQ, you know, for me, you could say my FOMO was that I watched this exact same setup happen earlier and I missed it. And now it's happening again. So for him, lack of patience. Yep. And you know, that's the thing with trading, is like we're addicted to the feeling of clicking that button and then watching the PL grow and grow and grow, right? And I'll be honest, it's sadistic, but I even think that we take some sort of satisfaction in even the losing trades, because the rush we get, or the feeling we get, the adrenaline we get watching price swing up and down, or even go to even go to stop loss, there's still a emotional feeling that we as traders are experiencing and have to deal with, and that alone can be addictive too. And like I said, it's not a good thing to be addicted to. So yeah, lack of patience for me, and in terms of FOMO, would come from there. I think a long time ago, I used to have lack of patience in the terms of not waiting for levels to get tagged and thinking I could front run things. And, you know, of course, you get humbled very, very quickly, right? So you lose. If you keep losing in the same way, it's going to keep repeating unless you identify it. So good job on identifying some of the things that are impacting you. So it looks like there's an IFEG setup here, but that looks like a pretty gnarly setup on ES. You can keep an eye on that. And then NQ's got moves much higher here. Got 3 minutes till the closure. Let's go to the 50-minute here for a sec and see what's happening. So there is a FEG forming here, so this will confirm in about 3 minutes. Now, another thing I'd mentioned about these continuation setups, and I'd said that I really don't like taking trades that are too close to the manipulation or distribution levels. Well, I would just say manipulation levels in this case, but because there's just no telling if it's going to like reverse, because these manipulation levels are also kind of like support and resistance, right? So like if you look here, it's like flirting with it, flips it into resistance, flips it back into support, right? Even the midnight level gets flipped into support off of a higher time frame here, right? But so when I'm looking at these types of setups, like I said, I want to try to be trading it in the middle of that range, because my goal is to just get that 1R burst move to the, in this case, it would be the 1D plus D, right? Take care, Mika. Peace out, brother. Appreciate having you here, man. And keep up the great work, man, in the community. I know you're helping so many people out around the clock, too. So, appreciate you, man. Bobby says it was the monthly review that brought that trait to the forefront. 100%, man. Our journals are what expose our good, bad, and ugly. Another thing to talk about too, while we have some time, is just, I would say, the loneliness in trading. I'm not sure if other people experience this, but I feel like I'll talk about this because I've talked to a few people about this, and just want to bring it up. Often we're trading, and if we're not like watching someone's live stream while we're trading, it can get pretty quiet, and you just have your own thoughts in your head, and maybe you have the community where you're just typing. But I think there's a fine line where you have to kind of understand that this is a solo sport. so to speak, right? It's an individual game, like golf, like tennis. It's not a team game, right? So as much as we will help each other and pat each other on the back, or give words of encouragement, or have conversations, or whatever that is, at the end of the day, like, it is still independent, because you're the one that's clicking the button, you're the one that's putting it together. So there is an element of this game that you have to accept as like that loneliness piece, and not let that impact the way you trade. If anything, you got to find a way to harness the power in that and have balance with your community. So if you're like constantly, in the Gen chat, for example, right? Let's say you're in the Gen chat all day long and you're just, you're just a warrior, typing every little thing. Like, you just always looking at, oh, what did this person say? What did that person say? Like, it can get pretty dangerous, because then you're going to start second guessing your own instinct, your own intuition, your own learnings, right? All it says, I have a personal journal template created with AI that has helped me with IFVGs and filtering setups. If anyone wants it, especially beginners, I'll share it if you're interested. Hey, Alice, I'll just ask you to send it to me over DM. I'd love to take a look, man. Thanks, brother. But yeah, going back to the community versus loneliness concept or conversation, I think there has to be a balance. And I think us as traders still have to learn how to deal with that loneliness and not look at it in like a negative way. So I use the word loneliness, but what I'm saying is try to channel it more into independence, right? Find ways to empower yourself in that space versus giving away your power, right? And remember, trading is a waiting game. So if I know my levels are to catch reversals off the extremes of a range, I have to wait for that to happen. There's no point forcing it. Set alerts and wait. That's all you can do. And then once again, just to talk about the community is amazing to have. And I'm not saying you should not have community. What I'm saying is you got to have a balance in terms of how you are using that community, right? It's one thing to be posting and helping and sharing ideas and things, and like, of course, that's amazing stuff, right? Like, and everyone would be very grateful for any information people are sharing and ideas. But like I said, when you're kind of always watching what someone's doing, or always waiting to see what the next person types about the setup that you want to take, maybe, like, you have to be very careful with stuff like that, because the last thing you want to do, and I'll say this again, is have your intuition of that, oh, I want to go long here, and then someone in the Gen chat starts saying some other stuff about why you should be cautious or whatever. But the thing is, they're not trading the same plan as you, for example, right? It's going to throw you off, and it's going to make you do something that's actually not part of your plan. And this is also where live trading forward testing plays a role, because by showing up to live price, that's where you can study everything in real time. The feeling of waiting, the feeling of what it's like to watch that trade play out second by second, right? There's a huge growth in that. And in that situation, there's also that empowerment that you give yourself in terms of being independent and not feeling lonely, because you have a mission, you have an objective. When you're just at the chart for no reason and you're chatting away in the community chat, or maybe you're just doing something else, like, why are you even doing that? I get it if, like, you're educating yourself or you have some time and you just want to practice or whatever. But once again, we're trying to create time freedom. So if you find yourself falling into that trap where you're just staring at charts for no reason, that's a red flag, right? And I'll be honest, I'm not saying this in a judgmental way because I'm 100% guilty of this. 100% guilty of this. Like, I'm human just like you guys are. You know what I'm saying? Like, my flaws are the same as you guys, most likely. And I'm sometimes looking at a chart during Asia when I should have no reason to do it. And nowadays I'm catching myself and I'm just like turning my phone off and keeping my phone like on my desk, like far, far away from me. Because that's the level of, I don't know what to say. That's just the level of intention I need to have. Like, I have to like put myself in a timeout. You know what I mean? It got to a point too where I had to like delete apps off my phone just so I wouldn't go in there. Instagram was like one of those apps for me. Twitter was one of those apps for me too, and I just recently put it back on because I want to just see if I can, how much. I just want to see how much discipline I've obtained since taking it off. TradingView is an app I will never take off my phone, but that is a discipline that I have to have regardless of just like knowing that there's no need to be looking at a chart if I'm in the Eastern time zone at 10 o'clock at night. Luke Trade says, Discord is the problem for me. Yeah. And I mean, so like if you run your own Discord, and I know Luke, you do, man, and all the power to you, brother. Even that, I would say, like if I look at Matt, let's just take Matt for example. So Matt is always around, right? But he's not always around unless someone tags him. He's not in there just randomly chatting, having conversations and things like that, right? Like he has a very different way of going about it. His attention will come when it's needed. His attention will be in the chat when he's focusing on trading. If he's not focused on trading, he's not in the Discord unless he's getting pinged. And I think there's a lesson to be learned about that if you're someone that is running a Discord. There's a thing about business that I learned a long time ago, and it was the conversation about working on your business versus working in your business. If you're always in your business, then you're not ever going to be able to work on it. If that makes sense. So you got to take yourself out at opportunistic times, well-defined times. Have some time management and hold yourself accountable to it. Because otherwise you're going to be a slave to whatever that vice is, whether you're running your own Discord, whether you're obsessed with NQ, whether, this is partially the problem with crypto is that it never stops. It's 24/7. And even if back in the day, I remember I wasn't even trading the 1 minute time frame. I was literally taking swing trades and I would just be sitting there looking at the chart. Like, what am I doing? Like this. I'm literally watching paint dry. There's no need to be looking at the chart right now. I've already done my analysis. I've already figured out what I'm looking for, and I'm just going to have to wait to see what happens. You set alerts and you walk away and you do something else. So like I took a trade right now with FET. I'm running a spot play. This is my play. I have no problem showing it to you guys, but I just had a hunch. I had a feeling. I liked how things were. I can even talk about this. Like I said, this has nothing to do with ICT here, but a big thing with what I like about crypto, I'll just switch gears here, but a big thing I like about crypto is it really does adhere to support and resistance and supply and demand, and it doesn't have to be so complicated. And I find when I was trying to trade ICT concepts of crypto, it just got obliterated. And then sometimes it looked too good to be true. But when I really looked at the ICT concept trades that worked, it always had like support and resistance, supply and demand elements to it. So why do I have it set up like this? Well, to me, this level here is a good level of support and resistance, or supply and demand, where price has, either found support off of it or has found resistance on the underside of it. So to me, this was a very key level. And then I like using EMA clusters. It's something I've always used with crypto to gauge trend. And everybody, I would think, knows that the 200 MA is a very, very important level for long-term trading. And it goes beyond crypto. This goes into the stock world, right? A lot of people will filter stocks looking for anything above the 200 MA. And then they're also looking for assets that are making new, 52-week highs, because they're trying to play those breakout trades. So what they'll do, if an asset is making brand new all-time highs, is they'll wait for a price to consolidate, and then when price starts to break back above that consolidation, they buy and they ride it up, and they keep rinsing and repeating. And it's a really, really simple strategy. So for me, I was using a lot of this with crypto. And granted, we are in a bear market, right? We are in a bear market, but there has been absolutely crazy things happening with these altcoins. Like there's a coin called H that I was tracking. And I mean, this is a great example of what I was just saying, right? Like if you have an asset that's finally making new all-time, well, this is not making a new all-time high, but it's making a yearly high after a massive, decline in price, and then you start getting consolidation, and then you start seeing the moving averages starting to flip bullish. You're starting to see it respect these levels, and then you see that consolidation now. Probably do something like this. I like the candle bodies personally. That's what I really like to use with crypto. Is not so much the wicks, because the wicks, to me, there's too much manipulation. But when a candle closes, that is concrete. You can trust the candle close. Right here, you get a candle close. It's the highest close in this consolidation, right? And is there ever any way of knowing what's going to happen? No. But this is why people trade crypto. They're just like, we're banking for this, right? We're banking for this. So if you had entered here, depending on what your goal was, like this thing went up almost 200% since Friday. And I've been watching this asset. And it had good volume too. Luke says 10 hours last week on Discord just on my phone. That is, my goodness. Yeah, that's a lot of time, man. Do you guys have that stuff on your phone where it tells you how many hours you've been on your phone from this week to the previous week? I find that's a really good little thing to have. Anyone have any questions about anything? Want me to cover anything? Let me see what else was I looking at. I was looking at grass. And, once again, we're going back to basics, man. Like, I just see this level here having resistance. 1, 2, manipulation here, some resistance here. What does that mean? That means if this thing breaks up above, it's just, the idea is a simple bump and run. Like, trading can be that simple. Is it going to always work? Of course not. But the thing is, where your invalidation is, right? I know where my invalidation is. So I was watching this as well. XRP is something I'm always watching, but the problem with XRP is it goes into a coma like this for a long time, and then here's what I mean. Like, let me show you. So Here's the previous bull run, which it didn't really have because it was subject to the lawsuits and all this other stuff. But then it goes into a coma here, and then always does it, and then just completely rips. Look at this, 500%. So it's back in the coma phase again. But I'm still going to watch it because, like, if you know how something behaves, and I talked about the beat of the drum on Friday, but if you know how it behaves, if you know what the rhythm is, what the pulse is, then you just have to wait for certain things to play out in that probability and then take a chance. Now, there's also some time elements involved here, but anybody can catch these moves, right? If you know what to look for. So where is it best to apply the 200 MA? Well, if you just snap the 200 MA onto your chart, it's known as the simple moving average, by the way, it automatically maps it per your chart. Is that what you mean, or are you talking about the time frame? Because if we're talking about time frame, I personally like using it on the daily and the 4 hour. And I mean, like, to me with crypto, the daily just seems like the best way, like, to observe, unless you're able to, like, trade on those lower time frames. But I like the daily the best. A lot of times what people also do is, like, let's just take this for example, right? So grass. So if grass goes into, like, my subjective level here of supply and demand, what I could then do is maybe go to, like, the hourly or the 4 hour, right? And start to look for these basic concepts of trading. Now, in ICT, we look at these things and say, oh, turtle soup or liquidity sweep, or there's all these different names for it. But the reality is, like, the fundamentals of trading are, you're still looking for, like, this is still a very notable setup, is looking for that liquidity sweep. And it's not going to always work with crypto. Like, it's really hard to tell. What people also do is they use the RSI to find RSI divergence. That's a big thing. You could also use SMT with, like, a correlating asset. So in this case, you know, Bitcoin or Ethereum are your correlating assets. Maybe Sol. But I think if you just stick to Bitcoin, it's the best thing to do. The other thing you could also do is align it with these moving averages. Because if we're on the hourly, these are going to be moving really fast, right? So once price moves into my range, now I could just wait for all of these to start to align itself and look something like this, right? So all of this is bearish, and then once it flips it, that could be an entry, right? And if I just look at this, for example, just to show you what I mean with even just supply and demand, support and resistance, like, look at this line. Just look to the left here. Bounces off it for support, rejects the underside, breaks above it, breaks above the 200 moving average, flips it into support. And then that's it. That's all it takes. And then you know what your invalidation is, right? Your invalidation is if this thing starts to close back below the bands, right? Because then it's moving back inside of this level of, like, consolidation, right? So the thing with crypto is you want to play it in steps, right? You want to play it in steps. You want to see price, you know, create some sort of a range. You want to see it then start to take steps above that range, move higher, create some more range. Now, you could say this is a market maker model and things like that, sure. But you're still just looking for these stages and these steps. Some people start to throw Elliott wave theory into the mix. Some people are using higher time frame supply and demand. So, like, if I'm trading on the hourly, maybe they're looking at weekly or monthly higher time frame levels to see where is the overall higher time frame, resistance going to be. But essentially, the basic concepts of supply and demand are the way to go. So, yeah, a little tutorial there on crypto and what I'm doing with it, and a little bit of just, quick and easy support and resistance. I mean, you could probably do stuff like this even in trading with NQ, I would think. Take care, Mitchie. Appreciate you, man. Appreciate you. So, yeah, anyways, I'm in FET right now. I was watching Near. I mean, Near is just exploding. Ondo was another big coin that I was holding, but TP was taken. This is another great example I was saying, right? Like, you have price moving inside of a coma here, and then once it starts to break out, you could take a chance on it and try to ride it to the highs here. Or you could now wait. You can see the moving averages are starting to flip, right? It's reclaiming the 200. So what you want to now see is all four of these lower time frame moving averages. So I have the 50, I have the 8, the 34, and I have the 20. If the 200 can now get underneath here and all of these other moving averages can get above it, like, that's a really good sign. And that's on the daily. It's showing you that there's a huge trend change potentially happening here, right? Because it takes a long time for that 200 to get, broken. Especially when you start going into these bearish trends like this, right? Algo is another one I was looking at. Tia was on my radar. I was just looking at stuff that had volume and things like that. Render. This is like a Trump coin, I think. Fight. I think it's a Trump coin, or maybe it's just a UFC coin or something. I'm not sure. JTO was also on my list. And JTO looks a lot like Ondo does, right? Where it's broken, it's come back, it's tagged the MAs, and now it's moving up again, right? So if we go back to Ondo, see that? So also with crypto is like a lot of things are fractal. You'll notice like similar patterns between assets. So like in this case, you have price going higher, it comes back into demand, creates a lower high, goes back into demand, right? If we go back to JTO, like look at what this is doing. Right? Back into demand, goes higher, starts to come back into demand. Now it's going a little bit higher here, but it's very, very similar. Another key coin that a lot of people, I think, have slept on is Hype, myself included, but like this coin is just absolutely going nuts. And then Inge was another one I really liked. You can see there's a nice rounded bottom here, right? So usually with rounded bottoms, you just measure the low to the midpoint here, and like somewhere around here would be your target. So in a perfect world, you'd have price go up, tap this back into support, and then you'd want to be taking your TP right there. So your trade would be like this, right? And the other thing too with crypto trading, it's not like futures where we're looking for 1Rs or 2Rs or things like that. Like you have to be very aggressive in your TPs, and you can't worry about the R factor. The whole point is just, are you making money on that trade or not? And it literally just comes to that. And of course, there's protection in how you place your stop loss and things like that, right? So, and then if you have runners, like if I were to take a trade from here, and it is, like I said, it's on my list, it's something I'm watching. If we can get some movement back in here and then it can turn the corner, then, this is like TP1. And then TP2 would be way up here. And you just keep skimming your profit. Now, granted, a lot of this rests on what Bitcoin's doing. And I'm seeing Bitcoin do the complete opposite. And this is usually what happens in crypto is Bitcoin will lead the way, suck out all the volume from all the altcoins, and then once Bitcoin starts to reach key areas and starts to slow down, all of that money is taken and then essentially moved into altcoins. And then you just start seeing random altcoins just popping because they don't have much volume to begin with. And a little buy order can really send the price rocketing. And then if other people see that oh, this coin has got momentum. They jump on it. And then it becomes like a chain effect or a domino effect. So you don't even have to know what the hell the coin's doing. If you can just understand some of the market structure elements of just supply and demand, like support and resistance, and just some general knowledge of volume. I don't have it on here, but like if you watch the volume, I mean, I'll give you an example. Like if I turn on the volume here, like if we look at the volume, all of this right here, you can see there's low volume, a little bit of bursts here, but then right here, you see there's a big difference in this gradual volume here, the way it's spiking, and it's very different from all of this. It's like these can give you some tells that if volume is coming back into the asset and price is now starting to flip key levels, it could be a good indication that price might start to take off. And nothing is guaranteed, but it's just like little things to look at that can help. It also works with like liquidations, or when there's like peak euphoria and there's like max volume, like those spikes. That can also be like an alert to you. All right, well, let's go back to what we know. And I mean, it's pretty boring to be honest with you with NQ. And like I said with NQ, just to switch gears, I'm not a big fan when price starts to move into that manipulation level. Like I wanted to see it up here. Hey, no problem, you see. Yeah, I wasn't planning on talking about crypto, but I thought, why not? Because I am still a crypto guy. But here's that 50-minute FVG, right? And if I go to the 1 minute, ideally what I was looking for here, I can get rid of this actually. That and that. And one thing I'll also say, EC, since you mentioned, or you spoke up there, is that I do think the low on Bitcoin is going to be coming in probably in October of this year, in my opinion. I think I saw Finest say 40K or something like that. Yeah, I mean, 40K. I agree. I see that number too. I mean, I think it could even go lower, like in the 30s, like with one of those scam wicks. Anything's possible, but yeah, 40K. I mean, yeah, for sure. Take care, Luke. Peace out, brother. Have a good one. But anyways, yeah, like this is kind of what I'm saying. Like I'm looking for SMT here, somewhere here. I have two indicators set, one for YM, one for ES. My preference is ES. I'm not gonna lie, but I do keep an eye on YM. Right, so if you have something like this right now, here's your IFVG. And this would be kind of like a continuation play. But once again, I mean, I like seeing like hourly candlesticks start to close above, not just one, but like if you can get a couple. Only because the last time I was looking at it, it literally reversed. It just like swept it and then went the other way, whereas if it was closing one or two inside, you now have like an inside play. But I mean, I can still keep watching this for a little bit longer here, for a few more minutes, and then we'll end it. But it's essentially this is what I would be looking for. Hourly closures above, zoom to the 15-minute. Where's the FVG? It could be 15-minute, it could be hourly, by the way, but I don't want it to be 5-minute. I want to use the 15. Go to the 15. At this case, see the FVG that's there and wait for price to move into it. Once price moves into it, if you start noticing the FVGs that could be used as IFVGs, then I'm going to make sure to slap on my SMT indicators and start to observe if SMT is actually forming in here. Because if it is off that position, then that's literally the setup, right? And you would just take the close like that, right? Now, I've stacked these. just on this is just like force of habit. But some people don't stack, right? Some people will do this, and they'll take the trade, and then once it moves into these areas, they'll put their stop loss to break even. So this could have been a potential skim profit opportunity with a break even follow through. But for me, I'd rather just stack it and wait for that proper confirmation and then take that setup. And this is this would be like a 30 to 35 point setup depending on how it closes here. But I mean, I'm just gonna watch this for the rest of the day, I guess, and just see what happens. But ideally, I like to see it. Once again, the continuation element is I don't want to take positions too close to this. I'd rather it be somewhere in the middle here, right? So like if this is the distance, and if I map out like some quarterly fibs here, what I'll do is I'll use these lines. So if I just map that range into quadrants, like I'd want to be seeing the trade start from around the 50% level. Do you get my point? And then push off higher. So it'd be something like that. That's what I mean. Okay, well, we'll end it there. I appreciate everyone's time today. I know I usually go on for quite a bit, but I think now is a good time to stop. I will be back on Friday, 1 p.m. Eastern Time. Be trading tomorrow, of course, and everything else. So everything will be, business as usual. But yeah, next live stream will be on Friday. I'm gonna try to get the replay of this posted sooner than later because the one from Friday I just posted it today. I totally forgot, so my bad there. Yeah, I think there's we talked about some good things. I appreciate you guys. Yeah, seriously, thank you guys. Jack, I appreciate you, man. Thanks for the wise words, or the wise words. Thanks for the warm words. Bobby, appreciate you. EC, Alice, I love, man, the fact that you made a little emoticon or emoji for me, man, that made me laugh. And laugh with like happiness. I was like, that's the coolest thing, man. It's an honor that you would even do that. So I know it's something so silly, but it really does touch me. So I appreciate you, man. Hardbowler, appreciate you as well, man. Good to see you. I noticed also in your 20 trade challenge daily check-in, when it asks, I have to put this out here because I think it's I think it's really cool. Right here, I always, when I do it, I always look to see what other people do as well because I'm keeping track of things just visually. But I noticed he wrote this today. One thing I will do is attend Kira's stream by 1 o'clock Eastern time. I was really touched when I saw it. So I was like, wow, 9 a.m. I was like, that's the best thing I read today. I was like, wow, someone wants to attend this thing and is like making a mental note of it. So I really, really appreciate that that support, man. So and if anybody wants to sub to any indicators that I use, like the 2 degrees stuff, just click the link in my bio, click on the 2 degrees trading view indicators, or you can just go into the trading IQ area and everything's there if you want to try some of these indicators out and things like that. They're all there for you to use. There's a link right here straight to the plan. I think this indicator is pretty cool. I'm still playing around with it, but if you're someone that does trade unicorns and trying to figure things out, like it's pretty awesome, man. I'd also say check out Juno because it's his indicator and he trades the unicorn in this way, and he's posting stuff on Twitter, so check him out. But yeah, other than that, God bless you guys. Have a wonderful day and a great week, and I'll be back on Friday. Peace out.